And let's start off with the Nairobi Securities Exchange, 10th straight day of gains. What are you seeing in the market?
Thanks, Larry. Basically, I think mostly driven by blue chip counters. Of course, mostly by East African breweries. We've seen massive demand come in for this stock, especially a lot of foreign demand. There's actually been quite a large demand overhead. Today we saw a bit of supply come in from local sellers, about 500,000 shares, which traded about an average of about 240. So this has really been driving up the index. It's one of the stocks on the 20-share index.
All right.
Also, we've seen quite a bit of activity on banking stocks as we approach probably the half-year results. So this is usually the cycle as we approach half year, actually end of every quarter, we'll always see a lot of activity on banking stocks, especially speculative stocks such as Equity Bank and Barclays that have quite a bit of float, which allow liquidity. So these have actually been driving the exchange for the last, I'd say, about 10 to 15 days.
All right, we already hit 12-month highs, but how much longer can we go on this little run of good news?
I actually think the rally will last probably till results have stopped streaming in,
right?
Because and also once we're starting to see books closing on bonus issues, on rights issues, like we saw that happen on Diamond Trust Bank. So the price has come off quite a bit from the highs we were seeing of 105 or even not 106. So it's come back down. So as we see books closures and also as results are released, we will see probably activity begin to lessen. But I think the major impact will probably, we should expect the rally to move, to continue. The biggest impact will come probably from political insecurity in the market, where the market will feel a bit anxious as we draw closer to the elections.
Before we leave the Securities Exchange, we've just seen results out of BAT out this evening. Their operating profit up 24%. The profit before tax also up from about 1.6 billion to 2 billion shillings. What are you reading in these sleeves?
BAT is always, it's always a very good stock. It's a dividend stock.
Yes.
It's a defensive stock. We've seen the price rally from lows about 260, I'd say about 3 to 4 months ago, to now up above 360. So it's actually rallied. As at end of year, their dividend yield was about 10%, which was quite good. And what differentiates, I think, probably strong stocks such as BAT and maybe fixed income securities, where most of the money has been for the last, let's say, 18 months, is with the stocks such as BAT, you can leverage on the dividend stock and also count on the capital gains that are expected, especially in a market that everyone expects to move up. So we've seen a lot of interest on BAT. It's also, I think, a unique stock in the manufacturing segment, because it's assured of its, I'd say not 100% assured, but more than other companies of its client base.
Right.
So this keeps growing, especially in developing countries such as ours. And of course, the export income has kept growing regionally as regional trade increases. And the biggest, also we've seen the currency has also, the strengthening of the Kenyan shilling has also helped pump up their revenues. And also the decline of global raw material, the cost of raw materials. So that has actually helped the results quite a bit.
You're a fixed income guy, so let's talk that side of the market. We've seen an upward movement there. What is happening?
Of course, there's been a tick upwards.
Yes.
This was since the last MPC meeting, where the market was a bit taken back when the rate was held where it was. But also, I'd say the open market operations we've been seeing, especially the term deposits, have caused quite a bit of a distortion, especially at the short end of the curve,
Right.
where the repo rates are at about 18%. Prime rates had gone down to below 10% to single-digit numbers. So what we've seen now is a correction upwards as more interest moved towards the open market operation instruments.
Because that appears to have been distorting the markets quite a bit.
Yes, it has on the short end. So what we've seen is a hump has developed where the curve was actually starting to regularize. We're seeing a curve that where the long end was actually beginning to move upwards and the shorter end, which is what we'd call a regular curve. This has changed. We've seen a hump come back in the probably 1 to 3 year segment, where these rates have in line with what's happening on in the repo rates. They've actually moved up to levels of about 14 to 15%.
Right. We'll leave it there. Ken, many thanks for speaking with us.
Thank you.